And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market forecast for Monday, October the 17th. Thank you for joining me and trusting me with your time as we seek accurate context, good risk management, and patience in our trading. I hope you had a nice weekend. Hope you're rested and ready for this week. We're coming into the teeth of earnings season. As far as economic numbers are concerned, it's a little bit thin this week. This morning, we had the Empire State Manufacturing Index come out with a big miss to the downside. Third month in a row of lower manufacturing index from the Empire State. Tomorrow, we're looking at industrial production, and then we get into the housing market. The housing market index tomorrow at 9 a.m. Central. Got a couple of talking Feds late in the day tomorrow. Bostic at 1 p.m. and the best name for a talking Fed in the world, Cash Carey, speaking at 4:30 tomorrow Central Time. Wednesday, housing starts and permits. We get into the deeper housing this week. And then, of course, the EIA petroleum status report at 9:30 on Wednesday. We did Tuesday. We get through Wednesday. Thursday, jobless claims as usual. Manufacturing Philadelphia Fed Manufacturing Index and existing home sales, misleading indicators in nat gas all on Thursday, and really nothing to talk about as far as releases on Thursday. What are we watching this week? Well, of course, we're going to be keeping an eye on earnings because earnings season really begins to ramp up this week. Beginning with more banking today and tomorrow. Tomorrow getting more into some of the health products. And then kind of climaxing on Wednesday afternoon with Tesla and IBM. So we got a couple of biggies this week to keep an eye on Wednesday. Of course, we're going to be focusing on housing. Wednesday starts and permits. Thursday's existing home sales, keeping an eye on how inflation and interest rates are, of course, going to be treating the housing market. Lots of speculation that we're going to be seeing a pretty deep down dip in housing, and lots of other ideas that are suggesting it's not going to be that bad. I'm hoping for the latter, of course. We're looking for the Chinese GDP to be released tonight. It'll be Tuesday in China, but they're looking for a bit of a rebound, but still really not good numbers. Still kind of dragging along 50-year lows as far as the Chinese GDP is concerned. And Wednesday, we do have the Beige Book coming out at 1 p.m. Central. That means it's 2 weeks from the next FOMC meeting. Seems we just get past one, and we're already looking forward to the next one. As far as the VIX is concerned, dead flat this morning, right where it closed on Friday, 32.02. We've got our equities, everything looking rosy this morning, 1% at least higher. We got Nasdaq 1.8% higher, E-mini S&P's 1.4% higher. The Dow up. Back up around, getting close to that 30,000 level. The Dow futures are up 346 points this morning. So things are looking like a little bit of a rebound for us this week. Of course, we'll have to see how these things play out for us throughout the week. The dollar index a little bit lower this morning, but still kind of range bound for the last week. Trading currently, or last I checked, at 112.83, and the yield on the 10-year continues to leak higher overall, a little bit lower this morning, but 3.92% the last I looked. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast, Market Recap, and everything we do here. Subscribe to our YouTube channel. you're notified when we do go live. We're going back to our regular scheduled programming this week. We do have group coaching today at 1 p.m. Central. Make Hogue Money tomorrow morning, right after the forecast. So we're going back to the standard schedule, and I'm working on expanding some things and making some small changes as far as times are concerned. And I will let you know as soon as I know that has been approved and qualified, and everything has been changed for next week. Next week we're going to have group coachings at 12:30. At least this is my hope. Group coaching's at 12:30 because we're going to be adding 2 more sessions of Make Hogue Money in the afternoons on Monday and Wednesdays. Still be doing the Make Hogue Money at the same time on Tuesdays and Thursdays, but we're going to catch 2 opens and 2 closes every week in Make Hogue Money. That's my hope. I'll let you know as soon as that is finished, and we are set to go for it. As always, if there's something that we want to see on the forecast that we're not doing, something we could do better, please let us know. jhoagland@topstep.com. If you have questions for group coaching today, I know I had one a couple of weeks ago that I have not been able to address. I'll address that today. I know I've got another one that came in over the weekend, so we've got a couple of emailed in questions for group coaching today. Always looking forward to seeing you there at 1 p.m. Central. Good morning, Caprice 101. First in the room, you win the prize. Frederico, Sonny, Nasdaq, good morning. Rooster, Jules, Brody, Tachyon, Bill, Joe, good morning. Serenity Trader, good morning. Sarah Hall, good morning. Prayers and love to you as well. Top Step, good morning, Top Step. Ricardo, Ron Merlot, good morning, Ron Merlot. John Doherty, good morning, sir. Always a pleasure to see you, and thanks for all your help last week. Cavs and Cubs, Joel, good to see you. Dimitar, Patrick, Scott saw, and he conquered. JTS Wave, Marcelo, Jordy, Eric Hill, good morning. Let's get GM, get money. There you go. JNR, good morning. Dan Trader, JD Royalty, JNR, good morning to you. Zareen, good morning. Dark Kevin, let's go. Absolutely. Let's get down to business and follow our process and stick to our strategies. Anissa, good morning. Rusty Golfer, Haggle Matters, it's good to be back. Thank you very much. Vince, good morning. Charles, Khalid, Unicus with the quote for the day. Unicus, thank you very much for posting these. We all really enjoy them, I know. Do you really need to think more, or is it simply a matter of doing the work? Great quote, great question. Ask yourselves that this morning. DA Dowitzer, good morning. Glitter Sandwich, good morning. Orion, good morning. Trading Research, Rob T. and Sean Fitzgerald, good morning to everybody. Maybe a couple of new names there I haven't seen before. Thanks for chiming in and saying good morning. As always, it's a pleasure to see new folks, and it's always a pleasure to see the old folks, the Futures family. All right. Anne-Marie, it's good to see you, Anne-Marie. We have been missing you. I've had more people asking how you've been, how you're doing. I know you were in the in that storm, and it's great to see you again. Looking forward to having a chat soon, and seeing you perhaps for Make Hogue Money tomorrow. Glad you're doing well. I've been kind of following you on Twitter, and I know that you're okay, and hopefully things are going well for you. But again, a lot of folks have been asking about you. I've been letting them know that you're still tweeting, so you're doing okay. So Hurricane Land, yes, thank you. Yeah, that's a scary thing, man. Scary thing. All right. Speaking of scary things, what do we got going on in the markets? Wednesday is October the 19th. Do you remember where you were on October the 19th, 1987? I know I do. I remember very vividly where I was and what was going on at the time. Doesn't mean it's going to happen today or this week or anytime soon. It just always in my mind when we get to October, I always kind of focus on the 19th. And then, of course, the other scary thing would be, of course, Halloween. Maybe I'll wear my famous Halloween mask for you all, and we'll have some fun on Halloween. I don't even know if we're working on Halloween, but whatever. All right, let's get into the markets here. And again, looking like things, oh no, 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 no. Don't close that out. There we go. All right. We have some pretty deep excess in these equities from last week. I think it's going to be very interesting to see the market test those levels and look for opportunities at those levels. Let's get in and take a look, starting with the daily in the S&Ps. So obviously, we have some medium time frame to the downside here. Since basically the beginning of the year, it's been basically to the downside. We had a nice pullback here, but medium time frame, we're back to looking at lower structure here. Thursday's excess. Look at the entire week last week was comprised of Thursday's low and Friday's high. This is extended trading hours, of course. So Thursday we added 30,000 in open interest off that low. Buyers came in big time. Friday we added 11,000 in open interest in the opposite direction. Is it starting to feel like we've trapped a few shorts down there? Maybe. But I'm looking at this excess that we put in on Thursday is really substantial. When we talk about excess, ladies and gentlemen, in a market, excess is when price really gets overextended to one direction or the other. Sellers just disappear and buyers take over and push price significantly in the other direction, and sometimes even very quickly. I mean, we can see this on the TPO chart here. This was the move to the downside, right, on Thursday. As soon as the market opened up, they tried to push this market lower, but sellers just backed off and buyers took control for the rest of the entire session. So this excess down here, while it doesn't look as huge on the profiles, is a big area of excess on the daily chart. Let's go take a look at the 30-minute chart. No, that's the point and figure. Here we go. All right. So here's our excess on Thursday. Here's the pushback on Friday. Still some potential area for repair down here. We were kind of looking at this market as if we close the gap, we could fall into repair, which would take us from this point of control to this point of control. We didn't get to that point of control. Sometimes when things don't happen, it's equally as important as when it does. All right, so last week's high and low, the low Thursday, the high Friday, we're in the middle of it. Do we have some new sellers here on Friday that might be a little bit trapped? Maybe. Overnight inventory is to the long side. We opened right about here. We've been pushing price higher. We just pushed overnight high a little bit higher. We've got overnight high and overnight low, basically right around value high and value low from Friday. I'm going to be looking to try and stay patient. I say that all the time, even though we've got some overnight inventory to the long side, looking like we may open outside of value. We still see potential repair in either direction. In other words, this day on Thursday was double distribution, maybe even more than one distribution, but we had an area of volume down here that just kind of remains unchecked. There was single TPOs that moved us to an area and a high volume node up here. We traded to this high volume node after re-entering value from Thursday on Friday, but we never really got to this level down here. So there is the potential for continued repair close to our weekly kickoff low, which remains from last week. There was no real acceptance down there, so it remains an area of potential support. And then we've got the kind of the the single TPOs here on Friday that could take us back to the higher volume nodes up here, and then to take a look at the low volume node down here. Did we already do that today in an overnight session? Maybe. So we're going to be looking to see if we reject value and look to trade back to higher levels to finish the repair from Friday. Remember, we open in this area right here. There's a good potential that the market is going to try to trade to this high volume node and down to this high volume node. It tried on Friday. It couldn't finish. Important information. So I'm going to be looking to use extremes to manage risk. Okay, so our extremes from last week are obviously Friday's high, Thursday's low. Anything in between, I'm going to be probably looking for opportunities near high volume nodes to be able to limit risk. Mondays typically are not my best trading days, ladies and gentlemen. I say that openly, and I'm giving it this opportunity to kind of let me get into this week a little bit and see what happens. We certainly see some buyers coming in here. Opening out of value does possibly open up the opening range trade possibility for us. Take a look at crude oil. Speaking of opening range possibilities, are we, when we're looking at the daily, we've got lower highs, we've got lower lows. Joe, I wouldn't call that necessarily a special situation in the S&Ps because I look for special situations to open outside of range and then seek acceptance inside value. Okay. All right. So here's the crude oil. Could we be kind of building a bull flag here? We are trading December. I've changed this to December. By the end of the day, there will be greater volume in the December contract. So if you haven't done that yet, if you haven't traded, maybe go ahead and change that. There is a $1 discount in December from the November contract. So you can adjust your levels. It's almost looking like we're starting to create a bull flag here, which would be interesting, would be good. Now, we've got OPEC cuts that we dealt with for the last week and a half, 2 weeks here. This pop was when it was happening. Since they've cut, we've actually been pulling back. Did it change our market state in the medium time frame? No. We still put in lower highs and a lower low. So this bull flag potential could bring us to higher prices, of course. That's what would be expected when we have supply issues, but we can't discount the fact that there's economic pressures that may keep people from buying gasoline. It's expensive. Take a look at the 30. We probably have an opening range possibility here. So here's the 30. Here's our bull flag. We've got a long way to go before we get to either extreme in this regard. We did open in range and in value. We're taking a look at the overnight high, which does offer the opportunity to limit risk. Let's see if we have an opening range situation here. Well, hello there. I haven't put it on this chart yet, so I'm not going to worry about it. This is our opening minute here. So we're looking at a low of 85.20, 85.53, the high, 33 tick opening range, and we've looked out the above the opening range first. If we were going to be trading it, we'd be long about here with a stop a few ticks below the low of the opening range, looking for the market to continue its move to the upside. We can see right here, this is our overnight high. This also gives us an opportunity to limit risk in either direction. If we were short up against it, we might be looking pretty good right now. So last week's high and low in crude oil look interesting as well. Yep. Wait a minute, we're on the wrong spot here. Last week's low. Last week's high is a long ways away. So overnight high and low also look relatively interesting for opportunities. If we use the overnight high as a resistance area, we're sitting pretty good now, maybe ready to take out the low of that opening range. Nasdaq. It reads almost the same as the S&Ps. The Nasdaq has been so much weaker overall. It did pull back deeper into our area of excess from Thursday, but structurally, everything remains lower in the medium time frame. Thursday's excess, and viewing that as a meaningful excess, I think there's a lot of support there. A lot of buyers are going to be there. Until they're not. Open interest built Friday, built on Thursday. We added 2,800 on Friday. On the downside, we added 5,200 on the upside on Thursday. The fact that that open interest is rising, to answer your question, Rooster, is it's building energy. There's big moves that are coming, and as far as equities are concerned, we can be relatively confident that that's going to be true. So I think that there's a lot of energy building in these equities when we see consistent increases in open interest, and even it doesn't even have to necessarily be directional. If we see a whole bunch of open interest piling in, there's interest, and where there's interest, there's opportunity. Wait a minute. So, it seems as though, again, the new sellers that we brought in, that's not a huge 2,800 increase in open interest to the short side here, but we may have trapped some new shorts down there in the hole on a Friday. Why would they do such a thing? We've got last week's high and low, Thursday's low, Friday's high, same situation. We're centrally located between those two levels, so try and stay patient, looking for better trade locations as the day goes on. We have the same situation. We did not get to the point of control down here, which may bode for some potential for repair, and then we've also got repair potential from Friday's session all the way up here. So we've got, almost a relatively random walk inside last week's range. There's visuals down here for us to focus on. There's visuals up here for us to focus on. Overnight inventory is to the long side. If we don't continue the push higher, we stop short of the overnight high, or we get above the overnight high and pull back, there may be opportunity in that for us. Alrighty. I think in our equities, with the central location, they're looking for new data. They're looking for new information. We may get to some of that information, of course, in the earnings. Again, we've got, what do we have? Tesla and IBM on Wednesday, a couple of biggies. Gold. Not quite sure how to handle gold these days. Longer time frame structures to the downside, but we've recently put in a higher low, or so it seems so for the time being. We added 1,400 in open interest on Friday on that push to the downside, which put in our weekly low, but seems to be rejected at this time. Weekly kickoff range, centrally located. Now I think we're even relatively centrally located inside of last week's range. So our little tennis player is centering himself on the court, trying to make sure that if it goes higher, he can hit it. If it goes lower, he can hit it. Take a look at the 30. So we do have this 1, 2. Not sure I like this trend line. Doesn't have a lot of frequencies or contact. But we do have overnight inventory to the long side. We are up against a potential area of resistance. Overnight inventory, if they don't continue to get paid, and this looks like pretty substantial overnight inventory to the long side, if they don't continue to get paid, they'll get out en masse. They'll offer us better trade location for longs upon that opportunity. They'll offer us opportunities for a decent short if they do unravel. So keep your eyes monitored for that. Interesting, challenging opportunity at this trend line, I think. Euro. Keep your eye on the dollar when you're looking at the euro. The dollar really hasn't moved much in the last 5 sessions. Look at the euro. It hasn't moved much in the last 5 sessions. We added 1,600 in open interest on the downside here. A little bit lower volume, pretty decent volume off that low on Thursday. But we had already put a little bit of excess down below that level. Again, the market seems to be coiling and adding open interest. That's building energy, of course. We're in about 5 days of balance here as the dollar, as I mentioned, has steadied. We're looking for short time frame control for risk management, short time frame levels, because I believe this market is kind of falling, even with higher open interest, is kind of falling into short time frame control. I think the major players have kind of put their positions on and waiting to see what happens, and we're going to respond to that. Take a look at the 30. Overnight inventory. Is there any? Yeah, maybe we're starting to get a little bit long here. Look at the range from last week. It was all on Thursday. So we've traded up here. We have not traded down to here. Be very interested to see last week's high for an opportunity for us, or last week's low, or maybe the high volume node down here that we did not get to go and recheck. Similar to our equities, we didn't check both sides of our repair area. I was kind of looking at this earlier, going, I don't really see a lot of open or overnight inventory here. We're starting to see some buyers come in here again, and if we've missed that, which I say there's probably a 100% possibility of me missing that. Our next opportunity, I think, is up against last week's high. Check out the 10-year. Really towing the line again here, isn't it? Really holding that downside line. We lost 3,400 in open interest off that line on Friday. What do we do on Thursday? Let me take a look here. On Thursday, we lost 1,400. So this whole last week, we lost a bunch of open interest. Volume was, of course, lower on Friday. Does it seem like the downside auction is tiring? It seems to be putting in less push. Basically, this last push to the downside has fallen into balance. This trend line here, while we did kind of look above it, it still seems like an important level for us. We know rates are going to continue to go higher. There's not a lot of question about that. Technically, I think this market is set for a pullback. I think the downside auction is finally showing signs of exhaustion, especially with the last 2 sessions of open interest dropping. Here's the 30. Overnight inventory to the long side. Again, last week's range, Thursday's range. Lower high, higher low, shrinking. finding some sort of area of balance. I'm looking for opportunities to really focus on the extremes. We've taken out our overnight high already. If we can't hold that, then might be enough to push their overnight inventory to capitulate, to get out of those longs. And looky what we have here. We have a weekend gap. We have our head and shoulders in the natural gas balance, looking like it is finally heading towards its measured move from the head and shoulders, which is 560. Our weekly kickoff low. We lost 3,600 on Friday in open interest. Doesn't surprise me. We were balanced. We got to see what kind of volume we bring to the downside here this morning. We've got overnight inventory to the short side. Our overnight inventory is holding tight. They are holding pat, looking for this final continuation and the successful measured move again to the off of that head and shoulders. How do you sell this market? But it might just be the thing to do. Where do you find risk? Well, the opening range, the high of this opening bar, high of this bar. I don't know. I don't trade this market. It's a little bit crazy for me, so we have to see how all this plays out. So, again, it is Monday. It is scary week, October 19th. We do have some limited but some important economic information. Get ready for your trading week. Looking forward to your success. And I will see you hopefully for group coaching at 1 p.m. Central. Anything else? Anything else? Anything else? I don't know. Let's get out there. Let's take our deep breath. Calm, centered, creative, humble, and grateful in your trading today. Get out there and profit. I'll see you for the group coaching, and then again at the end of the day for the recap. Always a pleasure to see you for the recap as well. Okay, gotta run. I'll see you in the proverbial trading pit here in just a few minutes. Get out there and profit today. Trade well. I'll see you later.